Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey, Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. We've got another big show planned for you tonight, and thanks very much for being a part of this one. Can you believe we are just 2.5 weeks away from 2021? Have I counted right there? This means you all need to be setting your goals for the coming year and beyond. Sounds like I'm giving you a bit of a talking to, doesn't it? Well, you're right, I am. You have taken time out to watch this show. We know you genuinely want to do well. So from now and before the fireworks on New Year's Eve, remember, take 30 minutes out of your week. Get really clear about your why. This is what you want for your future and those you love. This is for next year and the years ahead, and then document that vision. Write the steps that you think that you need to take to get what you desire most, so to get that vision. And if you don't know, just ask for help. We're always here to assist you. Okay, that concludes my little pep talk with you for 2020. Tonight we'll answer your most burning questions. This is investing and trading questions. We've got a great list of stocks again to explore with you, and of course we've got another interesting topic, that is top 10 trading tips and strategies to profit that work. Hello, I'm Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators.
geez, with that long introduction, I didn't think you actually needed me.
Remember I said at the start of the show you're not allowed to criticise one thing?
Oh, I was just saying I'll retire. Okay, yes.
Yep, mum's the word. Now look, before you open your mouth again, I just want
what
to
has she got?
stuff something in it. No, I'm only joking.
You want to stuff something in the mouth?
There's a little box here. Now, there's something inside it. I think you should have a look.
Is it going to pop out at me? Or
it might.
Does it have a gun in it?
Do you want to just put your hand in it? It might bite.
Oh, what is it?
It's a Santa suit. I bought it online. It should fit you perfectly.
A Santa suit that's going to fit me perfectly.
Oh, look how small it is, gee.
I'm sure I could fit my finger in the hat.
Can you put it on maybe one arm? I think
I could fit it in. Is it a glove pump? I've got a present for you too. I've got a present for you too. I've got you a candy cane.
Oh, that's awesome.
But I wouldn't
Just
eat
what
it.
I need.
It's about 5 years old.
Well, it's been wrapped in plastic. Do you want to do the taste test and tell me if it tastes all right?
No, it could be dangerous.
Okay.
Well, I'm guessing
you could
it's
stir
5
your coffee with it. Add a bit of sugar.
Well, it might stand up in your coffee. God.
Okay.
Anyway, let's get serious. Anyway, remember, if you do have a burning question for us, you can send an email or upload a 30-second video of yourself to Dropbox and then send us the link. Now, remember to please send all of your questions to info@wealthwithin.com.au. We'll give preference to those who are supporting us, so make sure you hit the subscribe button before you send us your question.
Moving on, it is the third Tuesday in the month, and this means that we're looking at world markets. So let's get into the charts now, shall we? What made you get me a candy cane? Oh, you're funny.
You're going to be thinking about that all night, aren't you?
I am. It's just got me intrigued. But you wouldn't wear the Santa suit, so I had to buy you one.
I can't. But all I can do with this Santa suit is put a bottle of wine in it. That's about all it'll fit, or a stubby.
Anyway,
keep going.
Right,
What are we up
let's
to?
look at the world indices. Let's get down to business. So NASDAQ 100 index, right? It's up 41% so far for the year. So we know that that's all being driven by the FANG stocks and the tech sector, which is about 25% or 23% of the US market. And then we've got India following close behind.
So well.
Wow, won't the Indian families be excited about this? 35.7%. Now, the bad news is that if your market does really well and outperforms like that one year, then it's not likely to do the same the following year. So we can expect these indices to be towards the bottom, or at least in the middle of the board at the end of next year potentially. That's typically what occurs. Now, the Nikkei is actually 16.8.
That's done well.
That's done really well, but that's sort of really different to what's been happening on some of the other Asian markets, like the Hang Seng, which is way down there. If we point down here, minus 6.58%. So different, isn't it?
Yeah, well, your Shanghai comp's up 9.8, but your Hang Seng's down 6.5, and it's both Chinese exchanges. So how does that work? I mean, obviously, the Hang Seng being out of Hong Kong with all the unrest that's happening in Hong Kong. But wow, how is the Shanghai up?
So we're looking at, you know, the Nikkei is up strongly. The New Zealand market's even up 15.4%. That's done incredibly well.
Yep.
So we look at the Australian market at the moment. Currently, it's up 12 off incredible lows, but it'd be really interesting to look at what it was by the middle of the year. Tokyo Topic 1000 index 11% up. The CAC 40 up 10.7%. If we come down to the European market, 6.57%. This might take off in 2021, and you know we're looking at the FTSE as well, which is way down. So if we're talking about the European markets, the FTSE may actually do really well next year as well, because it's been held back for a long time. And same with the DAX, we've seen that just do nothing. It's practically
flat.
flat.
European markets haven't done as well, and obviously Asia generally hasn't done as well as the US. And this is the thing, is a lot of people don't understand that money moves around the world. And so what's done well one year may not do well the next year, which is what you were saying before. So where is the opportunities now? You know, the US is going through a period of transition right now. There's a lot of unrest. They've got to get hold of COVID and get over that. So look, I really think the US market will struggle next year. I really do, in a lot of different ways. You know, because of, you can't just snap your fingers and get out of it over COVID. Now, whilst they're saying, hey, we're going to vaccinate so many million people by March, how do you vaccinate 250, 260 million people? It's just not in quick succession.
Well, that would be an incredible process, wouldn't it?
It would be an incredible process, and then, you know, then how do you, it's going to take time to get to that point. Now, to me, the US should just stay home and put masks on like we did, you know, but they're not doing that, and that's why that's had such a big spread. But, you know, but then even if you vaccinate everybody now, then it's going to take time for industry and everything to get back to normal again as well. So how long is that going to take? International travel is another issue, because that's, you know, maybe 2 years away.
Tourism, imagine the impact.
Tourism, the whole lot. I mean, you know, so there's a whole range of factors there. And Europe's not much better at the moment. You know, we're seeing mass outbreaks in lots of areas, like obviously like the UK. So, you know, they do need to get that under control. But I think the Asian markets are much better poised to get out of this. And they've actually, most of the Asian markets have handled COVID better than the rest of the world.
Yeah. Look, I've noticed that the focus is shifting to the climate science at the moment in terms of a lot of the media coverage. I don't know if you've observed that as well, that there's a lot
Not at the moment, but yeah.
Yeah, it depends on what you're watching in the world news. So, look, there's talk about the vaccine still, but they're starting to talk more about that. So I think that's just going to heat up into 2021.
Well,
so there we have it.
As you said, stay tuned for that one for next year, right? So you're going to bring it to everybody then.
Yeah.
But thanks to all those who did send an email in to us, and you know, to me, like I was saying the last few weeks, the questions we have been receiving, you know, have been great, and we really do thank you for participating and to help yourself, but also it helps everybody else learn as well, because if you're asking questions, I guarantee probably 10 other people have the same question for you. So please keep sending those questions in. But now our first question for the night is a video question, which is from somebody called Nathan, who I heard is a good-looking dude. So let's take it away, Nathan. What's your question?
Hi, Dale and Janine. My question is about gold ETFs, particularly GDX versus miners. One's currency hedged and the other isn't. What's the best for an Australian trying to invest this way? Is it better to get a currency hedged one at the moment with our dollar going up versus the US, or take your luck with the unhedged one? Anyway, thanks very much. Enjoy watching your show. Cheers.
Look, I mean, you've got a strong point on hedging and currency exchange issues when people are investing in overseas markets, for example. So, you know, how can you use that to look at ETFs in the same light?
I mean, obviously, if you've got two ETFs that are equal, and I've not looked at either of these two ETFs or what they're actually investing in or how the depth of what they're investing in. So you're not sure right now. I don't know whether.
But that's something they've got to consider. So, like GDX and the miners, which is the beta shares. So the GDX one is the Van Eyck one that you know that we've talked about, and the miners one is the beta shares version of it. So the GDX one has more exposure to the overseas or the global gold miners. The miners one I think has more exposure to the Aussie. Some Australian or more local stocks. So they're different in terms of the makeup. But when you look at these, you can look at the charts of these. We've got them just there. First of all, just further to your point, you haven't looked at the charts, so I've brought it up to show you that it only goes back to around 2015. So you haven't got a lot of history on the ETF for a start to see what you were talking about, which is just understanding how different they are, because it's not just the currency side of things. There's a whole raft of things that you consider.
My point was with one that's hedged, if its exposure is mainly international based, then you might go, okay, well, currency hedge might be worthwhile for that. And if one is just Australian based, then why would they need the currency hedge? You know, so therefore you've got to look into those different questions about what are they investing in.
Well, that's right. When you're investing in overseas stocks, you're always talking about the exchange rate and that being a potential issue.
Yeah, and the dollar is stronger against the US dollar. But again, and when you're doing a hedge, that means you've got to actively manage your hedge as well. So the fees in one fund may be a little bit different than another one for paying for that hedge as well.
The beautiful thing about this is if it's hedged, you don't have to worry about any of that. You don't have to manage that hedging process.
But I'm
They're
talking
doing
about
it for you.
how the fund is run and what the cost, the internal costs of the fund is. So one may perform better than the other one.
I think it was only marginal. When I looked at it, it's only a marginal cost difference for the hedging.
Right now, I don't think it's going to make a lot of difference. You know, I think you just look at one that you like the best, and obviously looking at the charts. So we're going to have a look at the charts and talk about them.
Yeah, I've got that up there. Yep. So one we've got there is the beta shares one first of all. So this is the Aussie company who's got this index, EFDTF index there. Yep. To me, they look very similar, which you'd expect. Actually, I've just got rid of it, so you can't see it. There's the monthly one, that's beta shares, and if I quickly bring up the monthly one for the Van Eyck, they're tracking each other very closely. So it's just a question then of the hedging and whether that gives you an advantage. And 9 times out of 10, you would say, hedge. You would say about the currency side of things, be aware of the currency exchange. And if you want to hedge, then to protect yourself from that downside, why wouldn't you take the beta shares one?
Yeah, well, you could, correct. You're correct. As I said, it's really hard, and I don't understand what these two are investing in the depth, because I've not read their prospectus or the details about each one of these two. So it really is, it's almost 6 for one, half dozen for the other. Which one is giving you what you want?
Well, the charts are showing they're very similar.
And they're very similar.
But I would choose, if it was me looking at this, I would choose the beta shares one. I would just have to say that if you look at it over time,
because
I would
it's
actually,
not hedged.
Yeah, I would actually, because it is hedged, but I would actually talk to them because beta shares are really good like that.
Yeah, beta shares are very good like that.
So I would actually contact beta shares and just get some information from them as much as you possibly can. They've got some great education as well in terms of what is, like in terms of their products.
Okay.
So that would be my tip, I think. But the other thing I wanted to say just quickly is that there's a gold ETF as well, which if you look at the gold ETF, it seems to be much more steady. There's more history on it. So that, to me is attractive from a gold point of view if you're wanting to look at the gold sector. So I think that's as our response. Have you got anything further to add to that?
No, I think you've done well.
Okay. All right, Next question is, this is the first email question we have, which is from Mandeep. Hi Dale and Janine and team. Oh, how fantastic that you're acknowledging the team. That's really awesome, isn't it? They'll be loving you. I entered the market first time in March and had no idea what I was doing. I bought 20 units of BHP for $26.40 and I'm thinking of increasing my position, but looking at its charts, it's sitting on an all-time highs, 41.45 every time, 2002 to 2020 it has reached there. It's had major pullbacks. Kind regards, Mandeep. Good that he's looking longer term. And we've also had a question from Mark about BHP as well. So I thought we'd answer this one together. And Mark just mentioned about BHP looks like it's going to do an evening star. Oh, that's lovely, isn't it? It's a pattern or a signal. Good opportunity to trade short, says Mark. So you probably can't quite see that one.
No, well,
can you?
I don't think an evening star is a strong enough signal to trade something short, but anyway.
Okay, so there's the comment, Mark, there's a bit of feedback there. But just looking at BHP, it's right near its all-time high. So Mandeep's right in that every time it gets up around this level, it seems to choke and has a real problem moving on. And I think, you know, right now it's experiencing that. So this week we're seeing it pull back to test the resolve, I guess, of the buyers wanting to push it higher. So there could be a little bit of downside to BHP in the short term this year.
Yeah, but also I'd say to you, just because it's choked there a few times in the past, eventually it's going to break through.
That's it.
At which top point that is. And that's where a lot of people go, oh, okay, it's hitting that level, I'll sell it. But that might be the point where it actually goes through it.
Yeah, I've seen people have strategies where when it goes through the all-time high, they sell it. Now, sometimes stocks will pull back before their all-time highs, as we know. We're studying this because it's just part of building the momentum to go through these levels. And sometimes they'll pull back just after they go through the all-time highs. So the fact that BHP has done this numerous times around this level seems to indicate that eventually when it does get going, it should actually do quite well above those levels. So it's just got to get there. That's the challenge for BHP. But we could see a little bit of short-term downside before that.
Yeah, we could. But I mean, also answering Mark's question, you don't short stocks that are rising strongly. You just don't do that.
Yeah.
That's, you know, your short stocks that are falling because you've got a high probability, because this may be down for 1 or 2 weeks and you may make a little bit of money on that little quick short, but then it could quite as easily tomorrow start going back the other way and finish the week on its high and above the previous week. It could do that.
Okay, so if he was going to short it, what would he be waiting for?
Well, I'd be waiting for it to be in a downtrend first, because it's about weight. It's like having a seesaw. You know, are you getting more buyers or more sellers? And right now, this stock over the last 6-8 weeks has proven there's a lot more buyers than sellers.
So as an example of the downtrend, once the stock had actually gone through these levels back with COVID, that would have been the shorting opportunity.
Yeah, this is the place you short down through here, because it was already showing it was downtrend. But even like through here, you can make some big money on BHP shorting through these sorts of periods. And it's just about increasing probability. And to me, shorting something at its top is a lower probability trade than shorting something that's already going down.
Yep.
You've got a higher probability, but great questions anyway from the guys. But the next question we do have is from Himmer. He says, hey Dale and Janine, it's Himmer here. I've bought in FMG or Fortescue Metals at $16 and now have made 23% profits from it so far, as advised in your book. I currently have stop losses as well. My question is, will it continue to rise in 2021, or will mining stocks, including Fortescue Metals, get crushed due to current disputes between China and Australia? I'm aware that we are their primary iron ore supplier as of today. Why, another big long question. You give me all the long ones, don't you? All right, I'm not allowed to complain, guys. FMG is a favourite of mine and I'm planning on holding it for at least 2 years. Would love your overall opinion on the stock and its future. Thank you.
All right, you ready? All right, so we've actually looked at FMG in detail. We know it's getting to an important level, which could reverse the share price. At the moment, it's been pushing up strongly. It's just the this week, it's actually trading around the same range as it was the prior week, because we think that it got a bit ahead of itself. So at the moment, it's more likely to fall away in the short term, I think. But I think there'll be plenty of opportunities with FMG down the track. I just wouldn't be doing it right now.
Yeah, I think hold it while it's going up and get out when it's going down, but it looks all right. It'll probably slow down a little bit, but...
Yeah, so look, strategy, trend lines could be a good one for this one, couldn't it?
Yeah, just use trend lines that you learn in my book, but make sure you just don't worry about the upside. And I think that's the question that you had, was more like what's going to do in 2021. As long as you've got your downside protected, you don't need to worry about what it's going to do in 2021, because it'll tell you it's coming down and you get out of it. And if it doesn't tell you going down, it's still going to keep trundling up. And then your stop loss will keep raising up with that, and you'll be capturing most of those profits again. So you don't have to necessarily predict where it's going to be into the future, if that makes sense. Yeah? So
you gave me the squeaky chair, didn't you, so that I'd have to sit still?
I gave you a candy cane and a squeaky chair. You're a
lucky
girl.
Can't reach you? Okay, the next email we have is from Mikhail. Hi Dale and Janine, as we're getting closer to reporting season, how do you think energy sector stocks generally are going to react to earnings reports at the end of this month? In particular, would you be able to have a look at Oil Search, OSH? What sort of reaction should we expect in the short term, days before and after 31st? Mikhail, whoa, that's a big one, isn't it? That's a big question. Look, we do like the energy sectors, including Oil Search, as we've said on a previous show where we looked at the energy sector. In the short term, there's some downside risk potential with it, but more medium term, I like this, especially if it pushes back above recent resistance. We can see that it's just taking a bit of breather from that at the moment. So, but, you know, I just think that it's more medium term, it's more likely to go up.
So now, that's our technical view, but he's asking about obviously the reporting. And obviously reporting is pure
speculation. Well, what I'm saying is, like, you know, that's exactly right. So, like, I'd rather look at the chart and work out what the stock's likely to do there. We know that when we go into reporting season, sometimes stocks like this, really volatile stocks, can react quickly and swiftly. So in those situations, you don't try to second guess what's going to happen in reporting season, because the opposite could happen. We've seen stocks that they have great announcements, everything looks rosy, and the share goes the other way. So go figure. It's more about what the chart's telling you at the time. That's all you can do.
That have got the biggest loss in their history, and then they shoot up, and it's you can't predict it. And again, it's just about having your stop loss underneath it if you do own it. If you don't own it, then trying to buy on a news or announcement from the reporting season, that's probably a bit more speculative than you need to be taking. But look, hey, we do like energy stocks at the moment. This one looks pretty good, doesn't it?
Does at the moment, yes. All right, you're
up next. My question, so yeah, I'm getting there. The next question that we have is from Andrew. He says, hi, Dale and Janine. Am I able to get your thoughts on IAG, as I purchased a small amount at $5.05 per share a few months ago, and now there's a share purchase plan available and it's very close to my initial entry. Is it worth topping up, as IAG do tend to do well over the longer term? Thanks in regards, Andrew.
Right.
Good question. That's a really good question.
Now, what do we say when we're looking at potentially topping up stocks?
Don't.
Not exactly. If the stock is in a loss, I should have given you that.
Oh, well, yeah, more clarity.
So if the stock is in a profit,
well, you can top it up, yes.
Because look, these share purchase plans or opportunities that you get, often they're smaller parcels anyway. So they're not a huge risk. So it's just about considering whether you want to be taking on additional parcels of stock, because it can end up costing you money, because you've got to have an accountant then work out the cost base for the different parcels when you go to sell them.
And sometimes you get them at a slightly cheaper volume, discounted to the actual market trading at the time. So
well, you're not paying brokerage, so that's often attractive to small investors.
It just depends on the position size, I think. You know, if you've got a full position in it and you only offered a few shares, well, maybe not do it. But if you like the stock medium to longer term, then it's okay. You don't want to set your risk out of balance. I think that's really
your overall risk for your portfolio.
Yeah, your overall risk out of balance.
Well, that's what your book goes into, all of the details for that. So if you've got Dale's book, look at what the risk criteria is for the portfolio, and then just make sure that you're adhering to all of that. It's good. Good comment there. But look, I mean, I like IAG. I like the stock, but it needs to be moving up for us to be wanting to put more money into it at any time.
Yeah, and I think it's whilst it's been up the last sort of 6 or 8 weeks, it really hasn't proven its long-term moving up yet, has it really?
No, and I'm a bit sceptical when offers come out, and I'm not saying this is about IAG, but I get a bit sceptical when these offers come out after stocks have just taken off, you know, because it just looks to me like, okay, you're going to create the interest and then,
Well, you don't know why it's taken off. I mean, I don't know who's putting money in it to push it up, do you?
Yeah, and often these share purchase plans, if they set a price for these, it can cause the share price to fluctuate to the downside if the market thinks, okay, is that going to dilute capital in any way? And then if it is, then, you know, what's the impact of that?
Okay.
So that's something to be mindful of as well. I hope you're enjoying the show so far. We have lots more to come before we get into that. Now is a perfect time to hit that subscribe button. Also, make sure you like the video. And look, our topic for today, this is really interesting, which is top 10 trading tips and strategies to profit that work. Now, making money in the stock market can be easy if you have the right trading strategies. In fact, many individuals achieve great results with just a few hours' work on a regular basis without having to risk their house. Unfortunately for beginners, though, many fail to fall prey to market myths and misconceptions, and this is what really gets under our skin, and as a result the stock market becomes another vessel for the transfer of wealth for the uneducated to the educated, and we want to turn that around. To be successful in the stock market, you must be able to differentiate from the trading tips and strategies that help you to achieve your success and those that are just market myths and misconceptions that'll do the opposite. So in fact there are too many market myths and misconceptions that leave investors at the mercy of those in the know. One of the biggest myths, that individuals cannot achieve their own success in the market. How is that? How is it that people have believed that over time? And therefore you become reliant on others to grow your wealth, which is so far from the truth. But this myth is perpetuated despite the evidence that demonstrates otherwise. So in tonight's show, we'll break down the myths and misconceptions by sharing with you the top 10 trading tips and strategies that will enable you to profit from the stock market so you become a successful trader. There we go.
Well done. Very, very good. Now, all too often we find that people wanting to be successful in the market do things that result in the opposite, such as looking for stock tips. And people give reasons like, I don't have the time, but what is this costing you by not actually learning? So by getting a tip, people go, well, I don't have the time, so I'll just let somebody else tell me what to do. But really, what's that costing you? That's really what we're asking.
And if you really analyse why you take tips, in most cases, this is some truth, it's really about you not having the confidence or knowledge yourself yet. So you look at someone else who also may not actually have sufficient knowledge or may have a vested interest for making that tip.
Well, you have to look at where do people get tips from? Like, where's the most common places people get tips from?
Oh, there's like chat forums and broking websites. Oh,
Friends,
yeah, that was your top one, wasn't it?
Friends, yeah, the research is friends, relatives, and chat forums. So, how do you know they know what they're doing? And I had somebody the other day, or a week ago, said to me, Dale, one of the statements I loved the best for you was, he said, would you give all your money to somebody with your level of knowledge and experience to trade for you on your behalf? And he said, when I asked myself, I said no. And so he's actually got it. And this is what you're really doing when you're taking tips. You're getting tips from people you don't necessarily know and whether they're good tips or not. And even research I've read lots of research around professional tipping newsletters. Like there's lots of research in the US around this. And they say even experts get it right 50% of the time. So if experts are getting it right around 50% of the time, what are the rest of us doing?
Yeah.
So, and that's really where you've got to be careful with tips.
Look, I spoke to someone too recently about it, which we'll talk more about in as we go through the points, but do you want to keep going?
Yeah, I'll keep going, that's fine. I just wanted to give you some space because I'm being a gentleman tonight. To get ahead of the myths and misconceptions, you really do need knowledge, and this reminds us of a quote from the great Stephen Hawking, who says, the great enemy of knowledge is not ignorance, it is the illusion of knowledge. That's a great quote. I love that quote. It is so good.
Yeah, I thought that would ring true with you because you often talk about how people perceive what they know and it's different to what they actually do. Yeah,
and it's people perceive they have, we talked about that theory, the Dunning-Kruger effect early this year, and we talked about that and how people have a cognitive bias towards thinking that they actually know what they're talking about. And generally it's the guys who are a little bit more arrogant, who always tend to be right. They're the ones that have this cognitive bias because they think they know. But when they really get tested, they don't know. And often when, like I've said before in some seminars that we've done, if you were to rate yourself, where would you be on a 1 to 10? And now rate yourself against, Janine. And where would you rate yourself? And the thing is people don't know how to rate themselves because they don't have a reference point.
Yeah.
Often I talk to people who ring up and they talk about wanting to trade, and I go, how confident are you at trading? Is it 1 out of 10 or 10 out of 10? And they go, most people say 7. And then when I start asking them questions, I find out they really don't understand that much. And I said, well, my view is you're probably 1 or 2. It's not being rude to them, it's just saying that's where you are. In my level of knowledge and experience, you're nowhere near 7.
So they can press a button and buy
They can press a button and buy and sell a share, but they really don't have a depth of knowledge, and that's really the thing that a lot of people overestimate and have that cognitive bias, thinking they know more. So, but what we want to do is to help you to be successful. So to be sure to write down these and bring them out again and again to cement what you will learn. So the trading tips we're going to be teaching, just write them down and keep doing them. So trading tip number 1, never take stock tips. And if you didn't hear that, never take stock
ticks.
Stock tips. Always do your own research and analysis into quality companies, and really be consistent in your process when determining stocks to buy for your portfolio. I think that's another one.
Have you got something stuck between your teeth?
I do, a bit of tonight's dinner.
Okay. All right. So yeah, stock tips. It's
Correct.
a big bugbear of yours, isn't it?
Yeah, it is.
We were just talking about before.
Well, yeah, it is. It is, because it's like, if you don't know, find out, and that's the way I've always been in my life. And don't leave your future to somebody else. And that's really what I'm saying here. It's like, you know, it's like letting somebody
You'll
else.
even say, like, if you talk about a stock and you think it's good, you'll even say to people, don't take my word for it. Go and look at the chart.
Look at it yourself, check it yourself.
Find a rule that works, and then see if it's a buy now.
Yeah, I mean, do you let somebody else tell you what car to buy, or what house to buy, or what, you know, milk to buy, or anything else to buy? No, but it seems to be people like quite happy letting other people tell them what to buy and sell in the stock market, and that just does not make sense to me. It's like, what's more important, buying a car or financing your future? You know, to me.
Yeah, I agree with you.
Yeah, it's
You
really
made some really good points there. Trading tip number 2, educate yourself properly. There are no shortcuts to success in the market, and this is the most important tip that we can share with you, and is why we started this business. So once you have the right knowledge, you as an individual can create your own success in the market, and this is not just our view, but the views of many who've experienced the difference. Listen to this.
Go and learn first. There is not any worse feeling than blowing up your account and not knowing why, and not knowing how to fix it. There's no more enjoyable experience than learning about it and achieving the goals that you set, because you now have knowledge.
I thought that, that's just so brilliant, isn't it, what she said? And it's so true. And the amount of people that I've heard say that after they've studied our course, and we don't need to say it, because other people will do that for us.
Yeah, you're correct. But it's often again, I've talked about people I talk to on the phone, and they go, oh, your course is expensive. And I go, so you want any course, or you want a good course? What would you want? And for a lot of people, it's just anything. And then they find out how costly anything is because there's an old saying by Zig Ziglar, if you're not willing to learn, then no one can help you. But if you are willing to learn, no one can stop you. But what is learning? And what's learning properly and being properly educated? And I find the majority, and there's probably close to 9 out of 10 people that I get to speak to on the phone when I do talk to these people coming to us. They spent 3, 5, even 10 years or more playing around, looking at YouTube, looking at all sorts of websites, sort of reading a few books and trying to piece it together, and yet they're still hit and miss because they're trying to do it the cheap way, thinking that's a better way. Or fast, one of the two. So they want it really cheap or really fast, but it's not necessarily the best way to learn. You know, you go to university for 4 years to get a degree so you can get a great job, and yet people think, read a book, I can trade. It doesn't work that way.
Yeah, good point.
So what's tip number 3?
Tip number 3, always use proper rules to buy and sell. Not just somebody said that this is a good stock or the stock's moving up, I want to get in on it. It's none of that sort of, emotional stuff involved. It's just black and white. The rule is triggered, so you buy once you know that rule is triggered. So just as a carpenter needs multiple tools to do his or her job well, it's not a one-size-fits-all situation with trading the market. And as a successful trader, you need to have multiple rules in your kit bag. And best of all, when you learn properly, you'll be able to prove that the set of rules that you use works best. Now, that to me was always the big clincher for me, because if I can actually, as we were saying before, you said prove it to yourself. Yeah. People sit there and say, well, how can I prove it to myself? Well, once you know how to apply the rules, you don't need Dale or I to tell you. Okay. You can actually go to the chart that we show when we come here every week and show you stock charts. You can then put the set of rules on the chart and determine whether the history of the chart shows that that's a good strategy to apply to, say, IAG, which was the last stock that we were using. There are specific sets of rules for every stock that will work better over time. Now, it doesn't mean you'll win on every single trade, because that's not what the market's about. It's about probability, and it's about staying in it and then adjusting your rules if you need to, over time, but have the data prove to you what's going to work best over time, really.
Yeah, I often say to our traders when they're learning and they go, I'm practicing, I said, that's great, you're practicing, but are you practicing perfectly? Because practice doesn't make perfect, it's perfect practice makes perfect. And by perfect practice that means you become, you know, you don't think that you know. And that's again that cognitive bias we talk about. People read something in a book and go, oh, because they've read my book and they go trend lines. And then how many people send trend lines into us and we go, not a trend line. Because they've thought they knew and they don't really know, because it's about practicing it the right way all the time and having those right tools for the right job, because some stocks will work really well on trend lines, some won't.
Yeah, because if I was to say to you that over the next 10 years, if you trade IAG in this particular way and you get an average win of this, and your win rate is 7 or 8 out of 10 times, what would you say?
I'd say great.
Yeah.
I'd just keep doing it.
So that's what, and when people start applying it, that's what gives them more confidence.
Making money's boring, you know, because you're just doing the same stuff over and over again. You do what works and keep doing it. Keep doing it. It's strategy, but it's not about creating the next big widget or the next big algorithm to trade. It's about doing the same stuff over and over again, like we do in our job. Okay, so tip number 4, always set a proper stop loss to manage your risk. And that should be your number 1 priority ahead of your profits. Now, set your stop loss before you trade so you know how much you are risking, and recalculate after you know your buy price. Now, that's one thing, 9 out of 10 traders don't have stop losses either.
That's right.
And
so they either don't have a stop loss, some of them don't actually recalculate it after they've done it.
Almost don't.
And some of them actually don't know what, where to, I'll show you something on the chart in a minute, but just say if we're looking at IAG.
Okay, so we'll go back to IAG again. You like this stock.
We bring up IAG, okay? Now just say I put a line on the chart, so I'm just going to grab a, now this is a horizontal line, so I'm just grabbing one of yours. So if I put a line across the chart and I say, okay, as an example, this has met my rules when it goes up here. I'm not saying that there's a specific set of rules for IAG at this point, but in February 2019 it was going up, let's just say, and my exit rule, my entry rule triggered. Well, it's about then deciding how much am I willing to risk. So if my exit approach is that I'm going to use a 15% stop loss like we talk about in the book, say I got in at the end of the week there, then the 15% stop loss is all the way, it's actually below that low. So when I look at that, I think that's great, because I know that, you know, if that takes out that low, I know the stock's going to turn down in a downtrend. So I know that I'm wrong. You know, it's got to, I'm in the stock at a time that turns out to be not the best time to trade, but you don't know that at the time.
You don't know that entry, yes.
You're going with probability. You only know what you know at the time when you're trading it. So probability says buy now, you'll make a profit. The risk is low because it's lower than my 15%. And now I'm looking at, well, how am I going to get out of this thing? So as it starts to unfold, there might have been trend lines to get out of it.
What other types?
Months after, there might have been other rules to get out over here on the right-hand side. So I could have made a profit. If I had have got out over here somewhere, I may have made a small profit out of it and locked in a dividend. Just depends on the strategy that worked best over time for this particular stock. But this is more about setting that stop loss. Now, you know, that to me is really easy to look at. It's easy to understand. But when you're setting the stop loss, if it turned out to be a 10% stop loss, whatever that dollar value was, once you actually get into the share, say 10% is somewhere around here. If you can see that clearly enough, I'm just going to squash it up so we can see it a bit better. We'd be getting out at 10% below what we actually bought it for, but we'd be getting out 1 cent below that.
Yeah, once it goes through that.
Once it goes through that. So that's another thing. So look, this is a really simple thing. So this is a part of a process that you go through when you're trading, isn't it?
Cool. All right, tip number 5, never trade leverage instruments without first learning how to trade stocks on paper trade. This is not just about using the right strategy, it's about your psychology, and you really do need to choose the right strategy for the market you are trading and know how you will manage your own psychology before you go down this path. I mean, too many people come to us who have been trying to trade FX and all sorts of other leverage markets because they want to get the money quickly, or the other one is I don't have much money, so I'm going to trade leverage so I can make it worthwhile to trade.
Or my friend's making lots of money by trading leverage markets, and I want to do what he's doing.
You're not your friend.
How do I do that?
Yeah, you're not
and
your friend.
It doesn't work half the time when people try to duplicate it, because one, you may not have had the development and in the skill that you need to get there, and two, you've only been looking at what that person's doing potentially for a window of time, and it doesn't mean that that's not going to change 6 months down the track, depending on what happens with the market that they're trading.
How many times you've had somebody saying, "Oh, my friend's been doing it really well," and they go, "How long have they been trading?" They go, 6 months, and I say, "Well, wait another 6 months."
That's right.
See what happens. Cool. Tip number 6.
Okay, this one's good. Use leverage to increase your exposure wisely, right? So this is gradually doing it. First to prove yourself that you can trade stocks. So that's the number one thing for at least 12 months before considering leverage. So this is what we talk about with moving the decimal place, isn't it?
Yep.
So that you can actually increase your exposure to the market. But be smart. Do it safely. Don't be desperate. You know, look at the way that you do things in life. Do you rush in gung-ho and just sort of, you know, have a go and dive in like you're diving into a pool? And, you know, people have been injured badly by jumping into pools and not knowing how deep the water is. Same sort of thing in the stock market. So just plan out your development over time. The market's not going to go away. It'll still be there. There's still going to be great opportunities down the track to make lots of money on stocks that have been just coming off lows that will be trading up long term.
Yeah, I mean, the road to successful trading is paved with impatient traders, you know, trying to make a quick buck, you know, and littered with it, or dead traders. So tip number 7, Janae?
Yeah, document a trading plan and trade your plan. Document your plan before every trade, and this is really key. Don't think to yourself, I'm going to write down what my rules were after you've actually pressed the button to buy on that broker's website. Sit down in the quiet of the day or night and then work out exactly how you're going to trade the stock. You know, do your back testing, your paper trading, and have worked all of that out. And then document your trading plan. So you put your buy price based on your rules, and when they trigger, you put a whole lot of information that's relevant to the
your
design.
Stop loss, your money management, how much money putting at risk, what risk
the fundamentals
taking,
of the
all
stock.
The fundamentals of the stock. There's a list of.
There's a whole lot of things on that plan that should be there, and then of course how you're going to exit. Did you say that?
Sorry.
Not just your stop loss, but the strategy that you're planning to use to get out is really important. And there are circumstances when you may need to adjust your plan, look, depending on how the stocks unfold over time. And this is where knowledge and experience will really teach you how to do this. So it's not something that, you know, you can just because you might be an intelligent person, that will help you. But it doesn't, just because you've been a dentist or a doctor or a teacher or whatever it is in your life, a carpenter, doesn't mean that you're just going to be able to pick this up and do it straight away and consistently over time. You need to actually have a path to follow. And doesn't that make it so much easier? If it's already done for you, all the research is already done for you, the process is already in place, and you just follow that. To me, that makes a lot of sense.
Trading tip number 8, trade well. Not often, and it's a really interesting one. A lot of people don't take this. Some people think you've got to trade more to make more money, where it's actually trading less you make more money. And it reminds me of a trader that went to like a workshopy thing many years ago before we even set up Wealth Within. And he rang me up because he knew I was a trader, and he said, "Hey Dale, I've had 36 trades this month." And I said, "So you're losing money?" And he goes, "How do you know?" And I said, "Because you've had 36 trades this month, you can't do that. It's just not possible, and it's not profitable." And he went, "Oh," and then he got a bit dejected. He went away, and a month later he rings him back up again. He said, "Hey Dale, I've had 38 trades this month." And I said, "And you're still losing money?" And he goes, "How do you know?" And I said, "Because you can't do that. You've had 70, nearly 80 trades in 2 months. It's not possible to do that and be profitable, very profitable." I didn't hear from him again. Not sure why.
Well, look, I'm not surprised by that, but look, I want to tell a story about a lady, because we have had a few cowgirl traders over time, because women tend to be a little bit more, you know, structured in the way they do things. But in this case, this lady, she was a real cowgirl. She was a great lady, but she was doing a lot of trading on daily charts, and she wasn't using because she hadn't done our course at that stage, and she wasn't using weekly charts. So she did our course, and once she'd done the course, she went back over all the trades that she'd done and worked out that she'd actually spent a bucket load of money with these brokers. No wonder they loved her. And, you know, that in essence, she could have actually made more by actually taking the rule to get in. She could still use the daily chart to exit, but if she used the rule to get in on the weekly chart and all the confirmation that she needed on the weekly chart, she would have made more money.
She would have had less trades and made more money.
That's right.
And I don't know how many times I've had that conversation with people, you know, and they come back a month or 2 months later and they go, "Yeah, when I went back over all my trades, I would have had less trades and made more money." So it works. So don't overtrade. A big sin in trading is overtrading and always looking for a trade. is over trading. You should just wait for the market, stalk it, and wait for the good trades to happen, and then go ahead with that because you'll be far more profitable.
Now, trading tip number 9, and look, you know how I always like to have a baker's dozen, but I didn't actually put a baker's dozen in this one because there are just so many. But trading tip number 9, document your results. You need a trading log to record the performance of your portfolio. Now, cash and stocks, not just stocks. Like the number of people I speak to, they've only recorded the actual trades. So what you do is when you start to trade, you say, okay, I'm going to allocate whatever it is, 20,000, 50,000, and for some people it'll be a much bigger number to start my trading portfolio. Well, you have to work out your performance based on the total, not based on the actual capital that you've allocated to the stocks that you trade. And this is what a lot of people don't get. You know, it's just the fact that you decided not to employ all of that money and you only decided to buy 3 shares instead of a possible 12. It's still part of your portfolio. So your performance will be significantly different if you didn't work all of the cash. And it's not to say that you need to get all of it working, because you don't. Because it might be that you only trade, 10 or 15 trades over the whole year, and you make the money with that. That's the thing. It's not about, having to keep that money fully invested all the time.
Correct. Yeah, that's a mistake. A lot of people think they have to have all their money in the market all of the time, when it's not true. It's actually completely the opposite. Trading tip number 10. When starting out, it's not about how much money you can make. When you start trading, focus on trading well and gaining the experience and testing your psychology in the market. So many people make this mistake, and it's a real big reason why so many traders fail. So once you have proper training, you need experience, and when you decide you want to be able to trade successfully, set a budget for yourself and for your education, plus an amount of money you're prepared to risk in the market to gain experience. So I'll say the tip again, it's not about trading, it's about trading well, or not how much you trade, but trading well every single time. And to me, if you trade well, that means you follow a defined set of rules and structured trading plan, everything else. And if you do that, whether you make money or lose money on the trade is irrelevant, because your plan
on
tells
one trade, you mean?
Yeah, on a trade. If you lose money on a trade and you've followed your plan, that's a good trade in my book, because you've traded well, you've followed everything that you set down. Because statistics are saying if you've got a 7 out of 10 win-loss ratio, that you'll win 7 times and you'll lose. So when the 3 times you lose, as long as you followed your plan, it's still trading well. But a lot of traders think, oh, I did something wrong, and they beat themselves up and they go, oh, I made mistakes, blah, blah, blah. But as long as you followed your plan, it'll all work out. And I had one trader call me years ago, and they crunched all the numbers, and they said, based on the trading plan that you have, it's impossible to lose. And I went, yeah, because you just trade the plan. You don't have to make it fancy and whatever else.
There was a guy I remember years ago, this is when we used to do the face-to-face workshops, and he was so excited about the market and he's doing the course, and he put in practice, he was focused on one of the techniques that we teach that he really liked. So I said, look, if you really like that one, it's probably going to work for you better first. So he's tested the stocks on that first, and he found that worked on this particular share that he tried. So he put it into practice. The first trade was a losing trade. And at the time, I can remember saying to him, when I saw his trading plan, I said, are you sure you want to put that much money in the market? It's your decision. I'm not going to give you personal financial advice. I'm not qualified to do it. However, it's just something that, I say to all traders that you really need to think about. So he said, I'm really comfortable, that's fine, but he actually wasn't. So when the first trade lost, of course, it affected his psychology, and he wasn't, he'd only just started trading, and that's why you need to trade with smaller amounts first. But then he got to the second trade, and the second trade actually was a losing trade with the strategy. Sometimes it can happen like that. You can have 2 trades in a row, but the third trade, which was an absolute boomer. I actually remember watching the chart to see this trade go off. But
and he didn't take it, right?
You're right.
He didn't take it
because
he was too afraid.
He was trading too bigger positions at the start. He didn't ease into the trading. Start with small positions, work it up, because a lot of traders don't realise the impact of the psychology on their approach.
Huge.
Yeah, they think I've just got to have the best stock to trade, or I've got to have the best tip, the best rule to trade. It's not that.
Well, above all, when you're trained well to trade a stock market, you actually become a good risk manager, and that's really what we're talking about, is becoming a really good risk manager. But look, we need to get into some more emails, don't we?
We really do, yeah. So now let's get into more emails. If you've enjoyed that topic, we hope you really did. enjoy this tonight. Make sure you write all of those rules down and read them over and over again. If you are trading the market, pull them out every time that you go, just to do a check on yourself to make sure that you're actually adhering to that.
Can I say something before we move on? Because people go, well, what are the buy and sell rules? Well, that's not the important part. The buy and sell rules come after you've done everything else and learnt everything else. People just go, well, tell me what the best buy rule is or best sell rule. It's not about that.
But why did you teach them? Why do you teach them that earlier on in the course then?
What do you mean?
Well, because you're saying that comes after, but in the course we teach them the buy and sell rules.
Yeah, but we don't
early.
teach them in Module 1.
No, true.
So we get them the process going first before we start introducing buy and sell rules. That's what I'm saying is too many people just think,
I'm just playing the
I want the best
advocate.
buy or sell rule now. But if you haven't got all the rest of it, it's fraught with danger.
Yeah.
And you'll go out.
So it's that understanding at first that you're building up, and then you've got the rules. Like, I love that Module 3. That's just fantastic.
Oh, it's a brilliant module.
It was a lot of work.
So let's get going, otherwise we'll be here till midnight.
But before we do, remember to hit that subscribe button now, and whilst you're there, give us the big thumbs up and click on the like button. Thank you very much for doing that. Now, we've got a question from Tech into our email questions again. Hi, Dale and Janine. When possible, can you please have a look at SIM for me? I bought them in March this year when COVID hit, expecting the area that will get government funding to drive us from recession, and it's been in a downtrend for 18 months now. Do you believe the downtrend is now completed and will be going up from here and resume its downtrend soon? Tech. Now, I think we've talked about this share a few times before, and while it looks like it may start going up, the challenge with SIM is its share ownership and the fact that this overseas company has bought out this stock, and I believe maybe taking it over completely. I'm not sure of the details because I haven't followed it more recently because of what was going on with it at a corporate level. I just sort of left it to one side.
But right now he's bought because he thought something might happen because
Look, technically it looks okay. It looks like it might come down for a couple of weeks, but it really needs to push back up above around $27 before it confirms it's going up again.
Well, the next email we have is from Ahan, who says, hi Dale, looking for your opinion on Horizon Holdings Limited and your opinion on whether this is more of a medium-term trade rather than a long-term one. Looked like there was an entry on the weekly chart, according to my trend line. I decided to buy at $4.28 as it's closed twice above the trend line. Cheers for your help, Rahan.
Okay, now I don't know how I did that, but I had to add that one to my list. So looking at AZJ, we've talked about this one too, I think, recently, and it has been, I guess we're not really going to make any comments about the trend lines because unless people have been really trained in how to apply trend lines, there's not much point in that because you're just giving someone a crumb and they're not seeing the full picture. So I just don't see the point in doing that. But you know, there's a number of rules that you actually have to meet before you can confirm whether there's a trend line, a real trend line or not. Now, this thing could just keep falling away. It's possible. But at the moment, there's some really strong levels. To me, what's more important right now is it needs to trade back above around that resistance at 440. Once it does, then you know it's more likely to go up. If it keeps going back below the $4 mark really strongly, 390, then it's more likely to keep falling. So that's there we have it.
Now we've got a question from Mood who says, hi Dale and Janine, I hope you're both doing well. Yes, we are a little bit hot today. It's hot in Melbourne. My inquiry for this time is about FPH. I was waiting for the stock to give a bit of confirmation on resuming its trend to get it. However, I noticed on the 4th of December that it broke the trend line, which I have held for it since August 2019, and it didn't break it even during March crash. I hope my trend line is correct. I was interested to buy the stock on confirmation and hold it for a short term until I see a sell signal, but for now I don't see any buy signals. Please correct me if I'm wrong. What is your thoughts on the stock, and what point do you think FPH could give confirmation to buy? Regards, Mahmood. You give me all the long.
I love giving you the long ones. I have to.
I'm taking over the script.
I have to do
from
it.
next year. I'm completely.
No, it's not.
Come on, let's just talk about the stock.
All right. Look,
before I get really hot.
I'd have to say that really good question, Mahmood. I think there is no buy there, which is what he's asked. So there's no buy. And as far as the trend line's concerned, well, You know, he's probably right. It is probably starting to move below a trend line now, but it's looking really toppy, isn't it?
Yeah, it is looking really, really toppy. I mean, it's done amazing all the way through here. So you can understand it's going to slow down and come back to a more normal momentum, which it looks like it's doing right now. So.
It would need to go through that all-time high before it starts looking interesting again.
Yeah, I think more right now it's got more downside than more upside than upside. So,
at the moment.
Yeah. All right, next question.
Next question we have is from Jojo. Now, this question actually came from the YouTube channel that you saw that you thought it was interesting. I'm currently holding AEF and I bought it at 5.20 as I've looked into their financials. Strong balance sheet, no debt, good cash flow. It's gone down below $5 now. Do you think it will go stronger in 2021? Well, you know, it wouldn't surprise us the number of times where you see the financials looking good and the stock price is just not going anywhere. And that's why it's good if you're looking at the technicals to back up the financials. So that's what we teach people from the word go, is that, the fundamentals are one thing, but if the money flow is not going into the stock, then what's the point in you putting your money at risk? So it could rise, and like you say, it's just really going nowhere at the moment, but if it starts to head back up above this high here, this recent high, it's more likely to trade up in the short term, but it still could get stuck somewhere between $6 and $7. So that's a real risk, isn't it, at the moment?
Yeah, I mean, it's got good support underneath it, you know, above that $4 mark. It's pretty strong support there, but if it broke through that sort of level there, then it's all over. It's come back down. It'll come back down to here.
It's just that it's pulled back twice. Like it's had the COVID fall, then gone up really strongly, and then come all the way back, you know.
Yeah. So it doesn't look super strong to me anyway. The next question we have is from JN. I really want to know if Qantas is a safe bet, considering they are almost the only airline. I'm so annoyed I didn't buy earlier this year. So that's interesting.
I thought you'd like that one.
It is an interesting question, isn't it? So,
annoyed. Like he's annoyed. What? You don't want to be annoyed at these sort of things, do you? There's always other opportunities.
Yeah, during COVID, buying Qantas earlier this year, I mean, if you bought in January, you still would have bought up the top up here somewhere, wherever it is. So there's your sort of early in the year. So you'd still be sort of...
That's November, is it?
Oh, that's December. So you would have been losing money if you bought early in the year. If you bought after COVID, you'd be doing really, really well. But why would you buy an airline with COVID, you know, when the world's shutting down?
Yeah. Look, I guess, you know, the optimum... You look at how far it's recovered, though. You know, and at the moment, the flights are not there. They're not getting the same sort of flights coming through at the moment. They're and I mean, isn't it that they're actually not putting all of their pilots back on at the moment as well?
Yeah, well, we've employed one of their pilots, so we've got one of their pilots working on within our assessment team. And I know other pilots have got roles in lots of different areas, but again, is where is their profit and their growth coming from in this next 12 months? And that's really, have they had their run and people were speculating on things, or is it really good? And I think if you're not in Qantas now, I probably don't think it'd be a great buy.
Look, I actually think that it's looking quite good from a trend point of view. So I do like the trend on the stock, and I actually think that the board, you know, over time have done a spectacular job with Qantas. So, you know, it's to their credit, and it's a real shame that it's Alan Joyce still there. I haven't followed Qantas for a while, but, you know, he just worked so hard getting Qantas up and going and getting the chart looking absolutely beautiful, and then the COVID scenario. So, but he's the type of guy who I think, and his team, that could actually turn Qantas around and help it get back on its feet and remain strong.
What I was suggesting is maybe it's had most of its run already.
Yeah.
That there's not a lot more left in it at the moment until things sort of get back to normal.
You'd have to ask, wouldn't you, from a fundamental perspective, do you think it would be worth what it was pre-COVID?
No, not now.
Yeah.
Because it wouldn't be making the profits, and it's got heavy losses from this past year.
Okay, so what you're saying is potential short-term downside until things sort of start to recover a bit more.
Well, look, holding costs on aeroplanes is not cheap, you know, and you've still got all this infrastructure that you've got in, and airlines are not cheap businesses to run, and they run on slim margins anyway.
Yeah, but looking at the chart?
Looking at the chart, look, I think it's got at least some short-term. It looks good, but I think short-term it's going to come down a bit more. But it does look good.
It does, doesn't it? All right, next question we've got is from Christopher. So this one we also got off our YouTube channel, so thanks very much for this, Christopher. He says, I think the pandemic has taught people the importance of multiple streams of income. Unfortunately, having a job doesn't mean security. Gosh, you know, that's so true, and that's something that we've been talking to people about for a long time, because the market is just like a big river of money that's there for people to just be able to extract the money from the market. And it does provide that additional stream of income. We've had a show, haven't we, that covered all of that?
Yeah, we do. We had a cover like, trying to get cash flow out and earning a living from the market, all that sort of stuff. And it is, to me, it gets down to that whole thing you're talking about is, if you fail to plan, you plan to fail. And it's no good saying the proverbials hit the fan, COVID shut everything down. Oh, now I've got to learn how to go and get a second income.
But the GFC hit people hard, and yet people still continued to do the same old thing that they were doing before the GFC. So is COVID going to teach people a lesson?
It has to some degree. We've got people coming to us now that we've been on our website for 10 years and looking at our reports, our podcast, inquiring about our courses numerous times, and they're finally saying, oh, look, I now really understand that I do need to do this, because if I keep putting it off, I'm never going to get there. And the answer is, you're never going to get there if you keep putting off learning how to make a second stream of income. And the market is such an easy way to do it if you understand what you're doing. And so I really encourage you, if you're thinking about trading, get educated and do it properly.
Good advice. Now, so the final question I save for you.
And hopefully it's not a long one. The final question is from Theo, who says, hi Dale, great content. The cannabis pharmaceutical industry has been in the news of late, making inroads for medicines to treat autism and pain. What are your thoughts on the company like Zelira Therapeutics, I can't say that one, which is licensing its clinically proven formulations in the US, Australia and the world? Could they be an undiscovered growth stock for the future? It's quite possible. Now, just to give a bit more clarification around that, the World Health Organization in the last week has taken off marijuana off their, I think it's the same class as heroin and everything else. They've taken it off that and decriminalised it. I can't remember the exact number.
So you've talked about this on your US show, haven't you?
Yeah, I talked about it on my US Talking Well show with Jim Beach about that, and saying, well, because I've had a few people saying, oh, is now the time to get into pot stocks or cannabis stocks, and they're trying to stagger profit into those sort of things. And the answer is, it doesn't change. Your investing techniques don't change regardless of what announcements are out there, because if they're not making money and they're in heavy debt and everything else, then you still wouldn't buy them regardless of what industry they're in. So it's about finding good companies, with good volumes, good liquidity, good prospects. They're making money. So this stock could be one of them. But let's have a look.
Let's have a look, because the monthly chart sort of tends to indicate, it looks like it might have been a shelf company and they've done a backdoor listing.
It does look like that to me,
the gap on the chart. And looking at the right-hand side more recently, the weekly chart, it sort of looks like it's a recovery, doesn't it?
It looks like it's not a highly liquid company, but you can see a lot of the volume coming in through here. So there's pretty good volumes at the moment. So this could be the one.
But when you say good volumes, can you just have a look at it properly? Can you put the crosshair on there for us so we can see?
There's the volume on the screen. What do I need the crosshair for?
Okay, so that's saying, 16 million?
16 million.
But at what price?
At 7 cents.
No, that's not a lot.
That's not a lot of capital in there, so it's still a liquid stock, but it's got good volumes now compared to what it was. If you look over here...
But I don't think that's good enough volumes for people to be trading yet.
No, I don't think
risking
so
their
either.
money.
It is a smaller end of the market, so it is a little bit more high risk, but it's looking good at the moment.
I didn't want to finish on a sort of an argument for the year, but it looks like we're going to.
Why not? I seriously, if COVID hadn't been around, I would have bought you some pink boxing gloves.
You've been saying that for ages.
I was actually in Rebel Sports the other week looking for pink boxing gloves, and all I could find was red ones.
Gee, you really, you bought me a candy cane and I got you a little Santa suit, so you really would have showed me up if you did get the boxing gloves.
I was going to, but, hey,
you would have trumped me.
I've got my ho-ho-ho ready to put my bottle of wine in there and take it somewhere.
Merry Christmas, yeah.
Merry Christmas.
Okay.
But anyway, last week we asked you to tell us, for those who have an opinion or have an opinion on the Australian stock market, do you believe it will be trading higher or lower than where it is today in the end of the calendar year 2021?
Now, you didn't pick a response.
No, I didn't pick a response because most people just said higher.
Yeah.
And that was, I think, well, I won't say it's a cop-out, but they all said higher. And I agree, because Jenny and I have been chatting about it being higher by the end of next year. And I think actually our market's going to be much better than the US markets next year.
Yep.
That's my bet is anyway.
Now, we've really loved your responses and some fantastic, intelligent responses we've received over time. So we decided to give you a bit of a break from these questions for a couple of weeks. That was the plan wasn't it?
Absolutely.
But unfortunately, we've come to the end of tonight's show, so it's almost the end of another year. And we hope that not only you enjoyed tonight's show, but you've also enjoyed all of the past shows that we've delivered to you. But the great content doesn't stop tonight, though, as we've got more for you over the next 2 weeks, haven't we?
Yeah, absolutely.
Do you want to just give them a bit
tell them about
give
it?
them a bit of a sneak peek?
Well, we've got a couple of things like unreleased interviews that Janine and I have done, so they've got that. So we're going to do a bit of best of, some of the best segments of the show over the last year, some of the best questions, but also there's some segments in there or interviews that Janine and I have done that are not to be missed and you haven't seen them before. So watch out for those. So there'll be 3 of those over the next 3 weeks while Janine and I take a bit of a break and get over our Christmas and New Year festivities, and then we'll be back next year.
And we want to thank you for participating and for all of your feedback this year, and really want to congratulate those who made the decision to invest in themselves and get a good education in the stock market. Remember, if you need any support and you've got questions about any of our courses, then don't let your questions go unanswered. You can call our office on 1300 858 272 or email us at info@wealthwithin.com.au. We look forward to hearing from you.
Now remember to hit the subscribe button now and like the video because Janine will love you. And also remember to share the video of tonight's show on your social media with your friends and colleagues to help keep them informed. Because as we know, the more people watch, the more we can do, the more interesting and informative topics we can bring you. And be sure to put this show on your calendar as we'll be right back here on YouTube live every Tuesday, 7 to 8 p.m. commencing on January the 5th. So the live show will be back on January 5th and we've got some surprises for that as well. However, we thought you might miss us over the festive season, so again, we have prepared some special content for you.
But you didn't tell them about the chat about the top stocks, did you?
That's a surprise. Just watch our YouTube channel. Just keep watching for some surprises.
If you would like to have your questions answered on the show, either send your question in an email to info@wealthwithin, as I was saying before. You can type the subject Wealth Within Live in the subject line. That'll really stand out for the girls when they're looking for your emails. And you must do that by 3 p.m. on a Tuesday to get into that night's show. And if you've got a topic that you would like us to discuss in 2021, and I've already had some people make some suggestions for some great topics, then make sure that you get those emails into us so that we can do that for you.
As always, thank you for joining us and we hope you have a safe and happy holiday season and we really look forward to seeing you again in 2021. So Merry Christmas everybody. But for now, goodbye, good luck and good trading.
Bye for now. Take care.